Tuesday, June 10th, market analysis. Stan Ehrlich, good morning. We have stock market indexes going up again a little bit. We're only about 2.5 points higher on the spider. That would translate into 25 or so higher on the E-mini. About, 100 higher on the YM. QQQ up a couple of points, et cetera, et cetera. All of them are a little bit higher for the day, a very modest amount, and still some of them overbought. Not only that, we now also have a bullish engulfing at the moment on the E-mini. All it has to do is close lower, and I will have a bearish engulfing, which I would love, but it's not happening. I keep telling you, I know what to look for, and I do something about it when it happens, but I don't jump the gun. I'm not going to be a buyer with the market extremely close to overbought just because it has an outside up day. I'll miss a trade maybe. You always are going to miss trades. The key is to pick those damn trades that do well, that make money, and a high percentage of them. You know you're going to make mistakes. Keep your profits small and let your profits run. That's my genre. That's my motto. I live by that. My strategies are built on that. So I'm very close to getting a turning point, in my opinion. Not quite yet. Let's look at the 1 minute for the E-mini. Getting close to the high of the session, which was last night. Not there. All it needs to do is go down and start to make new lows for the day, and I'll be a happy camper. Next, SPY. Very close to overbought, not quite yet. A little bit more pop strength. Might get it, should get it, probably would get it overbought. Then we're going to turn yellow and be primed for a bearish engulfing ER sell signal, which, by the way, I will show you. I think it was Tesla, and it's working. It happened after yesterday's recording. So stick around for Tesla toward the end, or zoom to it. It's a recording. Now, next, minor new high for the session on the SPY, but again, that's from 6:30 California time until current, and we close at 1 o'clock California time. So, minor new high, big deal. This market is creeping upward, which makes me very nervous. Next, we have, I think, an outside up day, just barely, low of 8.89901. Yep, today's low is a little bit lower than yesterday's low, and we're higher than yesterday's high. And it looks like we're in the process of ruining, unfortunately, the bearish engulfing, which did not work from last Thursday. Bummer. No major loss, no big problem. The day trade scalp on Thursday of last week, because of the bearish engulfing, did make money. So, and I can prove it because of the way that it functions, etc. It is hypothetical. It's not cash. I'm not showing you a cash account on this YouTube. These are all for learning purposes only. Thank you, CFTC, NFA, and SIPC, etc., etc. I don't want to break any rules. Now, I'm just very, very leery about this rally. Next, barely a new high. Maybe it's the exact high tick of last Thursday. There's a possibility I'm actually not stopped out. I might have topped out the exact same price level. One quick question. What's the high today? 3.06. What was the high Thursday? 3.05. I'm afraid by one tick, ouch, out. But hey, the scalp worked, and the stop that is the fail safe, if you don't move it, which we do, I don't show you that, but I move my stops awfully damn fast. That is one of the secrets to this strategy working. I just can't show you that on a daily data chart. It's only viewable on like a 1 minute, so you can see it move maybe even several times in an hour, maybe not at all. Depends on the circumstance. Next chart. Okay, QQQ, minor new high. extremely close to the highest high. Now, maybe we stopped out by one tick. NASDAQ did make a higher high than last Thursday. So even with a non-moving stop, which is stupid, I would have lost less money, but probably a bit of a loss, except for the scalp, which did make some good trades on Thursday of last week. Of course, those are day trades. Now we're yellow again. We're overbought again. The RSI actually got up to 75.03. That is equal to or larger than 75. I know it's a small amount, but it is black or white, and it qualifies. Therefore, it's overbought and turned yellow, and I am now primed for another red bearish engulfing if we can get below and stay below. Well, if we can get below yesterday's low and then stay lower than the previous close. Next. Well, we'll see how this pans out. You know how I feel. YM, Dow, still a possible double top. Just a little bit higher than yesterday, but not a new high for the move. But yes, it's extremely close. And yes, it looks like it's going to, but that doesn't make it do it. I've seen many, hundreds, if not thousands of it looks like, but it didn't do it. Next, the 1 minute YM. Not going to say much. Russell, well in the new highs, but you know, this is not acting like the other indexes, but it's still overbought. And that implies it's ready to turn down. And I think it will with the rest of the indexes when they all start to turn south, which could be any time now. Maybe today, I hope this week. Next, 1 minute chart dipping down very slightly at the moment, no big deal. And we've got bonds. They are up very little. They're not holding very well. We did bounce up a little bit of support. This is basically going sideways. There's a chance that I could get a nice bottom formation out of this, but it's going to take another couple, 3, 4 weeks. And I'll mention it more later as it develops or not. So I'm waiting. Nothing much to do in bonds or the 10-year notes at the moment. Can't make a definitive conclusion here, and that would be dangerous. You always want to be flexible. Again, you are, as a trader, right sometimes. It's your money management that counts, and the market is always right. Next, crude, second day overbought, follow through to the upside. But now we're actually down slightly. We did gap out of this support and resistance area, and now that we're trading above it, it is support. It used to be resistance, and it stopped it for 1, 2, 3, 4, 5 days until yesterday when it broke through. So now it's support when you come down, and there's a gap to close. So I am totally expecting, you don't always get what you expect, that it's going to come down, close the gap, turn back up again, and start to move up some more. Remember, I'm bullish long term. Long term means things could go sideways or against me some, not too much, for days, weeks, and even maybe a month, as long as I don't do it too badly. So a little bit of a dip here is just fine with me. Close the gap and turn back up again. Same thing, of course, with the bonds and 10-year notes, basically. Okay, now, and this is crude oil. I was sorry I got off the track, wrong commodity. Crude oil, dip down, close the gap, support area, go back up. Natural gas is coming down. You know that I did not expect to see the rally on June 2nd, which did not have much of a follow-through. Barely higher the next day, doji the next day, bearish engulfing the next day on Thursday of last week. No higher high on Friday, but a doji, doesn't mean much. Another bearish engulfing yesterday, and now we're starting to see it slide. This is coming closer and closer to the neckline. I really like the one that's a little bit lower the best. It slants downward very slightly. That's the one I think is the more proper. neckline of the two, but they both have some appropriate features to them. But that's the one I really like. So once we break below 3.36, we should be on our way down all the way to 1.3. Big move down if this, capital I, capital F, if this works correctly. Some of them do, some of them don't. But I know what to look for on the way up, the way down, sideways, etc. And of course, backwards. Ha, ha, ha. Markets don't move backwards very often. Next is heating oil. Gapped up yesterday, followed through today, but stopped right at a previous high. Resistance. I'll draw a little horizontal line in there for you. And that was right at that point. And that is just about as flat as you can get it by eyeballing it. And I'll drop it down just a tiny bit. So today's high is so close to being exact, it's ridiculous. Now I think we're starting to go back down, close the gap, and then maybe turn up again. In the last 2 months of trend, notice I defined the time frame, we've seen a bottom that was a bullish engulfing ER buy signal, fabulous. Another, that one worked okay for a day or two. Another one, the third one, that worked extremely well also, and immediately, 1 day up, 2 days up, 3 days up, 4 days up, all the way from almost oversold to overbought in 4 days. Great. Right out of my textbook if I ever wrote one, and I haven't. So I think we're going to slip back, close the gap, and turn back up again. Come down, close the gap first, then we'll see. Next. We bounced off of that trend line perfectly yesterday in gold. Then we're going to look at silver, platinum, copper. What happened? The market gapped down yesterday. What happened today? It came right up, closed the gap, plus an extra few ticks, and turned back down. Right out of a textbook. Perfect. So now the question is this line going to hold? Or are we going to break below it? And if we do that, then you're kind of in a vacuum here, no man's land. And you could drop off at least to 32.67 and maybe all the way down to 31.50 or below. But I got no reversals except for this bearish engulfing. You know, I like them, but I love them when they're also overbought and oversold, therefore generating the red and green buy and sell signal, ER signals. Okay. Close the gap. What next? Supposedly the trend line's tested and we're starting to head back up. Gap or no gap, but the gap is closed. So I think we're going to start to make new highs again and challenge on the upside 34.27 and then that previous high here at 34.76 and then maybe the top. Let's get through the first one first. So I'm looking for 34.30-ish and more. Next, overbought conditions in silver. Doji today, starting to slip. Well, this could be it. This could be the top, but I don't have a bearish engulfing. We still top out lots of times when you're overbought, and that's the only thing you got. This is in total new high ground going back to October of last year, and a lot further than that. Oh boy, it's a new high for multiple years. I usually have about 1,000 days loaded in memory to get a decent grasp on historical support and resistance, stuff like that, and relatively big patterns. I could easily put up 5, 10 years or even much more than that if I had to. Not much point in that. Overbought, starting to slip. Now I think it's going to come down minimum 36.10 and quickly. We're already halfway there from yesterday's high. Then we have a relatively good support area, a couple of highs right off of here. Let's put a line in for that. Right off of that one. And make it as flat as I can make it. Eyeballing it, that's about it. So stop the rally again. Have a low right at the same line. That's the next objective, but they're both very close. What do I want? Down to here, 33.64. Next, platinum. Overbought again. This time we have a higher high. So if we can get below, and it doesn't look likely because yesterday's low is way down there, but it still could do it. If we get below yesterday's low, we'll have a red bearish engulfing ER sell signal like that one there, like that one there. And of course, that one didn't do that well. It went down for only a day or two. But the last couple of previous bearish engulfings went down for weeks and actually months. But you know, I don't stay with my trades all that long. This is a relatively short-term trading system, but ER signals has 4 different trades. ER1 scalp, I love. Scalping, low commissions, no risk overnight, quick gratification, if you will. Has an outstanding track record and consistency and everything you would love. So it's just not making millions, but it's making a chunk. I think in 2.5 years, 77,000. I think so, something like that in 2.5 years. Someday I'll show you the spreadsheet graphics. There's thousands of these ER1 scalp trades in stocks, not commodities, in stocks only. All right, enough of that. Come down first, 1153.54. Next, probably 1090. Next. Going sideways last couple of days after overbought, failure to hold the rally, came back and closed below previous highs. Not a good sign usually. Went down a little the next day, a little bit yesterday, and basically today we are around unchanged at the moment. Doji not doing much. I am, because of the overbought condition and failure to hold in new high ground, slightly bearish, and I think we're just basically between a rock and a hard spot. I wouldn't be surprised to see it come down to 4.5 again. Next, beans, oil, meal, corn, wheat. Now, beans, another minor high. New high for what? Another week and a half, 2 weeks? Nice, but nothing great. Support held. Nice. Resistance hasn't even been tested quite yet. So, no breakouts. Sideways trading range for most of April, all of May, and now, so far, still June. Approximately 2 months and maybe a hair. Going no place fast. Next. Soybean oil. Sort of the same thing, just a little bit wider range. Now getting back into a little resistance, but it looks like it's hanging in there so far. And it could come back up a little bit more. But I got no signals. Got nothing major to deal with here. I'm waiting. Soybean meal. Boy, oh boy, what a bore. New low by a couple of ticks. A lot of support underneath the market. That doesn't mean it's going to hold. Trend is obviously down, but the downside momentum on an intermediate to longer term basis seems to be slowing. We seem to be starting to go flat. That implies, but it hasn't started yet, that the market could start trending higher. Again, a little too early to be convinced that it's actually going to happen. I hope. I got my fingers crossed, but that doesn't make the market move. Next, corn. Another new low below the support area. But at least it's gotten oversold today, and at least it's up a little bit on the day at the moment. But it's at resistance. It's stopping so far. I'd love to see it get higher than yesterday's high. That would be a bullish engulfing ER buy signal, which would turn green. And we've got one back here and at the bottom on to October 17th. And we got one that worked okay, not great. And a couple on the way down that did not work. And this one, which was great. So we're in the right spot for it if it'll only happen. Tesla, it did. Keep your eyes on the screen. Next, new lows by a chunk in wheat. Not going up, it's going down. Yesterday was a bearish engulfing at a resistance area, like I said. Down, down today. New lows for a few days. I think it's going to challenge the bottom. I see nothing bullish about this. I'm sorry. I'm trying to justify some kind of bullish pattern. It ain't happening. Cattle. I'm thinking of removing cattle and hogs from the market analysis YouTube videos. I don't think a lot of people are watching them or trading them. Takes up time. Overbought, looks like it's going to come down, close the gap. And hogs overbought also should start to come down, not yet, and get back to a support area. Okay, the stocks. Excuse me. Now, we gapped up a lot on Shell. We actually gapped right up above a double gap area, which is unusual to begin with. And the fact that we gapped up above it is very unusual. I can't remember a circumstance like this for a long time. I can't remember one. I think we're now going to go back down to the high of yesterday, maybe a little lower, but basically at least, then turn back up. We're overbought today for the first time, and reasonably so at 82, 83. All in one day above 75 for the first time in months. Yeah, about 2.5 months. Maybe almost 3. That's the last time we were overbought, when it topped out back here. And this looks like a perfect spot for what we would call an exhaustion upside gap. But it needs to start showing weakness. Don't see that yet. We'll look at Apple. Doji, not doing much. But the bear trend line has stopped it, and now it's starting to pull back a little. Support has also stopped it from going down more. Now, with a flat bottom right triangle, which this has some similarities to, the flat side is usually the side that gets broken, not the one that's got momentum to the downside in this case. So I'm looking for the test of support, and then maybe it'll break below 193. Tesla had a big, nice, beautiful green bullish engulfing buy signal yesterday, an ER signal buy signal. First time in quite a while. As a matter of fact, I don't see any on the screen. Going back to, what is it, September. Let's try to find one here. A second. Boy, it's going to take a long time. I don't see one at all. Reformatting. That's an exhaustion gap on the downside. No green, no green. Unfortunate, unfortunate. Wow, Tesla does not like to have bullish engulfing buy signals, ER buy signals. But we got one yesterday. Let's see how that works out. Obviously, because of the bullish engulfing, a closure of a gap, actually 2 different gaps in the same day. That was Thursday. And then followed 2 days later by the bullish engulfing. I'm now bullish going up to close the gap at 327.80. And let's see if it can get higher than that. If it starts chewing into and above 332, 332 plus, I think there's a chance it could test the highs of the move and keep going up some more. Don't burn your Tesla yet. Next, Carvana. Overbought conditions. Nothing significant here. Might have a bearish engulfing today if it can get below yesterday's low. Then I'll be much more adamant about it going down, which I think it's still going to go down to anyway, bearish engulfing or not. 292.61, my first objective, then down to support area. Well, actually, the more support is down here at around 267. That is a gap closure. I should not have this all the way over there. I should have stopped it right there, because that's the gap over there, and it got closed here while it gapped up. So there is a small gap to still watch to get closed right there. Okay. The E-mini again. Looks like it's still coming up some. Yep. Still getting stronger slowly. But all I can say is watch out. Don't get enamored by the consistent, small, slow strength. You guys have a great day and profitable trading to you.